morning, friends. Welcome to the daily show of Ask Abhishek Raj, the daily dossier. Now, quickly, let's go ahead and take a look at all that's going to make a difference and influence the equity markets today. So, let's just begin. 7th of August, the last day of the week. Usually on Friday, investors do not prefer taking excessive long positions, especially the retail traders, neither the short ones. People love to stay light on the weekends to avoid any kind of weekend related uh, changes that could happen globally. So, but again, it doesn't make much of difference. So now let's take a look at what all has happened in yesterday's sessions. So in terms of fund flow, foreign institutions have bought over 600 crores. Domestic institutions sold little over 450 crores. Index was purchased. Stock futures were sold. Index options were purchased. So these would have been most probably the sold puts in day before yesterday's session. So overall, it looks like there is no major change in the fund flow. Monetary policy decision yesterday did not change the interest rate. However, accommodative stance was maintained and some relief for NBFC companies which are struggling and taking now. So overall, it was a kind of balanced monetary policy. There is nothing exciting nor discouraging. Now, if you look at the options data, what we are looking at, markets are trying to make a range of in Nifty 11,000 to 11,500. Maximum open interest on call side is 11,500. Put side we have 11,000. So bottom line, markets are most probably expected to stay anything between 11,000 on the downside to 12,000 on the upper 11,500 on the upper side. Even the 20 days moving average is close to 11,000 price range. So that is going to act as a crucial support. Now let's take a look at Nifty chart. If we look closely at Nifty, what's happening is market is taking resistance on the ascending trend line, of the entire uptrend, which started from 9100 levels. So that's the only concern. Rest 20 days moving average, 100 days moving average, they both are above the prices. 50 days moving average also coming up. So now it looks like markets are not very far from crucial support ranges. So over a period of time, we should see some kind of consolidation followed by an uptrend. However, MACD, RSI, these both indicators are negative, so divergence is there. Yesterday's candle was a doji candle. So I would suggest, to make any further opinion on markets, one should wait for a closure in today's session, and rather in coming sessions too. What you should wait for is a closure either above Thursday's highs or below Thursday's lows. So that's what you should be following, because above Thursday's highs, it would be a doji candle getting converted into an uptrend. Doji is usually an indecisive candle, that is after a small uptrend or a downtrend, whatever you want to call it. In yesterday's session, there was no clarity between the buyers and sellers. We cannot say that there was either bullishness or bearishness. So indecisiveness was there in terms of market participants. So any closing above yesterday's highs or below yesterday's lows will give you the clarity on how markets should behave in coming sessions. So that would be all on Nifty front. On Bank Nifty, it looks comparatively weaker, taking resistance on 20 days moving average, but again sustaining above the 50 days moving average. The one more thing to worry about on Bank Nifty is the 20 days moving average looks like it has got a descending slope. So 20 days moving average falling, not at all a good sign. Doji candle again was there yesterday. So again, Bank Nifty's 20 and 50 DMAs are coming closure. So one thing to note down two prices. 50 days moving average around 21,500 and 20 days moving average around 21,960. So basically 21,000 to 22,000 price range. Any closure above or below this price range is expected to bring in volatility, a good rally. It could be downside, it could be upside as well. If markets close above 22,000 price level, we could see a good positive rally. Below 21,500, we can see a sharp correction till 20,500. Yes, that's the 100 days moving average. Plus RSI and MACD, they both are negative, just like Nifty. So that would be all on Bank Nifty front. Now let's take a look at how other indices have been working out. So number one, volatility index, that's cooling off, volatility decreasing, good sign. And again, it's cooling off globally. So this is one more reason why I would not suggest to take any bearish bets as of now, unless and until we get any decisive movements. Auto index looks great as demand is picking up post the lockdown. So find buying opportunities into auto. Energy is good. If in case it sustains above 15,600 levels, please buy. IT, buy if in case it sustains above 18,200, because currently what it looks like is it's resuming its uptrend post a small consolidation. Any breakout above 18,200 IT index could trigger a good rally. Metals are bullish. Find buying opportunity. We are talking about metals bullishness for many sessions now. So yeah, in yesterday's session, metals have for the first time closed above 200 days moving average. So please find buying opportunities in metals. Buy on dips. Pharma index, you should be very precautious. Pharma, currently it's very deviated. The difference between the 20 days moving average and the price of pharma is extremely stretched. So even if a small correction could be very deep, and even that deep correction would not be bearish, it has deviated. Now we should wait for either a small correction to come into pharma index to buy, or what you can do is you can do some kind of option writing to hedge your position, so that in case this volatility comes in for any reason, your funds would be safe. So pharma at current scenario, you should trade with hedging and protection. Now, so overall, if we sum up everything what happened yesterday, markets opened quite stronger, and post that market was consolidating. It was a range bound movement. Post RBI's decision, it was a kind of rally of 400 points into bank Nifty, and some good 150 points or 100 odd points into Nifty. But again, it did not sustain much, especially bank Nifty lost everything that it had gained. Rest, some other indices did pretty much well. Doji candle has been formed. So I would suggest all the traders on Nifty and Bank Nifty, both of them, to wait for a closer either above yesterday's highs or below yesterday's lows. So that is one thing. Now, so as we have discussed now all the other indices, so one thing is very clear: Nifty is way beyond safe in comparison to Bank Nifty, because Bank Nifty is the only sector that we talked negative about. Rest, we talked about IT, metals, energy, auto, pharma, everything is bullish. So majorly Nifty would be quite positive. Nifty should be quite positive, even supported by the positive global cues. Bank Nifty is the only problem from where we may see some weakness coming in case it does not sustain up very soon, because 50 and 20 days moving average are coming closure, and in case 20 days moving average falls below 50 days moving average, markets can go into correction. And in case it takes a support, then we are looking forward at Bank Nifty to be around 25,000 to 28,000 levels. Yes, you heard me right, 25,000 to 28,000 levels from current, even below 22,000 levels. So it's a very tricky market. Trade with hedging. If you have any queries, doubts, questions, how to hedge your positions, you can always contact me. My contact details are right here. Thank you so much for listening. That will be all in today's daily dossier of Ask Abhishek Raj. Have a great day ahead. Happy trading. Stay healthy, stay wealthy.